Good morning, everybody. It's the 29th of March. Welcome to another episode of Signal Centre. I'm Joe Neighbour, joined by the team, Steve O'Hare and Jamie Pakenham-Walsh. Good morning, guys.
Morning.
Morning.
How are we doing? All right?
Very good, thank you.
Yeah, all
Tippity
good.
top.
All good, thanks.
Glad to hear it. Okay, let's get stuck into the latest headlines then, shall we? So overnight, we've seen more volatility in yen. The Bank of Japan announced that it would continue its unlimited bond buying operations for a further 3 days, which helped trigger further yen selling. The dollar jumped to fresh 6-year highs just above the 125 level against the yen, that was, before a sharp correction. The former Japanese Finance Ministry official, nicknamed Mr. Yen, stated that there was no need for the Bank of Japan to intervene at current prices, but should take action if the yen weakens beyond the 130 level against the dollar. So that will obviously now be very well watched. There was some position adjustment in markets yesterday ahead of the end of the month, and also the end of the Japanese fiscal year, which is at 31st of March. So expect there to be some volatility created as of that. US bond yields edge lower despite US inflation pressures. The Dallas Fed Manufacturing Index retreated to 8.7 for March from 14 previously, while inflation pressures remain very strong, and there were stronger upward pressures on wages. Despite these inflation fears, there was easing of immediate upward pressure on the US bond yields, with the 10-year yield just below 2.5% yesterday, with the scope of further dollar buying. We've also seen the oil prices slide, which will be good news for Steve and his trade idea, which we'll come on to in a little while. It came under pressure yesterday. There's a sharp decline in global benchmarks amid unease over underlying demand trends. Brent declined to close 8% lower during the day as volatility increased. We've also seen some movement in Ukraine. There hopes to be some maneuvers over peace talks. There have been no major military developments in Ukraine, with further evidence that Russian forces are looking to concentrate on the south and the east of Ukraine. Talks between Russia and Ukraine officials are due in Turkey on Tuesday, with Ukraine aiming for a ceasefire. And finally, we had the Bank of England chat yesterday at 12 o'clock. The Bank of England Governor Bailey stated that the UK was facing a very large shock to income and spending, while the shock from energy prices this year is likely to be larger than any single year that was seen in the 1970s. He also added that the bank is beginning to see evidence of a slowdown in the economy, while there is a very large trade-off between inflation and output. So nothing particularly bullish coming from him yesterday, and painted a bit of a dim picture, really.
What, painted a dim picture of himself or of the
outlook? And of the UK economy, and what's
he
on
wouldn't
the
have to
horizon.
try very hard to do that.
No.
He's leaving a trail of destruction everywhere he goes. The FCA, Bank of England. But anyway,
Steve.
got nothing personal against him. Yeah, no. Anyway, thanks for the headlines.
Cool. Where do you want to start, Steve, on the charts?
Well, I'll start with. Oh, I can't get this oil chart off my charts. I don't know what's going on there. I'll pick up on just a couple of commodities. Obviously, oil, as Joe said, 8% slide. And I managed to capture 5% of that, which was quite nice. This head and shoulders formation on the short-term chart was highlighted yesterday, and it broke down nicely, getting a bit of a correction now from the lows of it got down to 102 on the WTI crude oil. On Brent crude oil, got down to 106 before we've seen this small correction. On gold, also this head and shoulders formation has played out really nicely. This was an upward sloping neckline. We had the retest of the neckline as well, and it has moved lower. We've got support now around about the 1910 to 1920 area. That'll be interesting today if we do get any positive news coming out of Ukraine-Russia situation. Then gold will take a hit. And popping across to indices. Indices sort of define all logic in my book anyway. And we've got a nice little turnaround, maybe a bit of an inverse head and shoulders here for this is the DAX breaking up to highs that we haven't seen since the end of February, so over a month since we saw these levels. So it's been a nice recovery. And potentially we've got resistance coming in at 14,827, which is only about 250 points away, which is just little skippity hop up there for the DAX. It's not these sort of volatile moves that we're seeing in the indices could take that out in a few hours. So also the Dow looking pretty good. This is the daily chart in the Dow. We're getting up close to the 78.6% retracement level, so we should see some resistance there. The previous swing high, 16th of Feb, we're approaching those levels now. So Dow slightly outperforming on that side of things, and Nasdaq just hit 15,000. So and again, they're the sort of levels we saw back on the 9th and 10th of Feb. We've also got this previous right shoulder of this potential head and shoulders formation. It broke down, but it didn't fulfill its potential. The high there comes in at 15,278. That's about it from my side of things. Oh, Bitcoin or
Yeah, have a look.
yeah, what are you doing, Bitcoin? Yeah, it's still above this resistance level, so it's broken it. It's confirmed a break of it. However, yesterday's candle doesn't look so clever. Obviously, this market is pretty overbought. And from a technical perspective, you don't like to see these sort of candles that were formed yesterday, shooting star type candle. However, a shooting star formation doesn't take place unless we get today's candle being negative, so engulfing previous day's body and moving lower and closing lower. So jury's out on that. If we do get a break back above 48,225, then there is potential for more upside and it negates this shooting star. However, get a break down below 46,700 and a close below there, and it's a different story.
Cool. Thank you, Steve. Okay, let's have a look at FX. Just going to keep it to three markets today. So first of all, looking at the dollar index, yesterday we saw that it was breaking out of this consolidation pattern, and we managed to do that on a closing basis. We got up to highs of 99.37, so challenging these highs that we saw on the 7th of March. Bit of a retreat today, but all in all, still looks pretty bullish and still expecting to see higher prices in line with this bullish channel. 100 is the key level that we're looking for on the upside, and still believe we can see that in the fairly short term. If we take a look at euro US dollar, obviously this is the flip side of what we've just seen on the dollar index. Pretty much we've seen a breakdown from this consolidation pattern here. We closed below it yesterday, but it was a doji looking candle, and we've seen a little bit of an uplift today. There has been a bit of strength in the euro over the last 24 hours or so on a broader basis, so there is potential for that to do a bit of chopping around here in the short term, but ultimately the trend remains bearish and we're looking for lower prices. The other market I wanted to bring up was dollar yen. Obviously, we've seen a fantastic move to the upside following the break of this 116.35 level. And in terms of what that means in a percentage basis, we've seen as much as 7.5% worth of upside in that following that breakout. So pretty spectacular, really. But what's interesting is what we heard from Mr. Yen, or the previous finance minister in Japan, saying that the Japanese central bank are unlikely to do anything until this reaches 130. So I've drawn that on my chart just because I think that would be an interesting level to keep an eye out for. If we do continue to see the US dollar appreciate against the Japanese yen and we start to hit this kind of area, then we can maybe start to expect that there will be some intervention by the Japanese bank or central bank, and we could be in for a pretty substantial move. So that's worthwhile, I think, pinning on your charts if you are trading dollar yen, or that's one of your favorite pairs. That's it from me. So, Jamie, I'm going to throw it over to you, and you're looking at what's hot on the stock front over the last 24 hours.
Yeah, there's been some interesting moves in the stocks actually. So this we looked at AMC yesterday, how it was kind of ranging. We had a bit of a double bottom pattern posted here, and it was kind of oscillating around this $20 level, $21 level, and we had this huge move yesterday. It was 44.9%, so a bit of a squeeze type move with huge volume as well, the biggest we've seen in quite a few months, that broke us above this level. So that was really interesting to me. We'll see how that kind of reacts from today, but certainly very bullish looking candle there for AMC. And again, it shows how important these support and resistance levels are, and when they're taken out, how there can be quite a considerable move after it. I was also
So what do we think that's? I know I'm looking at what's triggered that, because obviously you don't get 44% moves out of the blue
No.
generally. According to a Reuters report, the company was looking for more transformational deals to capitalize on its meme stock status. So maybe the Wall Street bets guys getting behind this again.
Yeah, I mean, it wouldn't surprise me. It's not quite the volume of when it really took off back in January of 21. I mean, we can see there it was trading at its peak 1.2 billion shares in one day, which is obviously wild, but nevertheless a really substantial move. So definitely one to keep an eye on. Going into, we're going to have a quick look at Tesla. Again, quite an interesting stock. We obviously had this huge run up over the last couple of years. It stalled somewhat, and it kind of looked like we're getting this kind of triple top pattern here. It kind of played out. It was a bit messy, but it probably, I mean, just eyeballing it, it looked like it kind of hit its measured move target down at the 700 level, maybe a bit short of it. But it seemed to have rallied really well, and there was a key kind of level of resistance here at this 950 level, where it obviously struggled to fight above previously, but it's had this candle here back on the 22nd that broke through it really well, similar to the AMC candle. Not quite the same volume, but it really broke through there, and it's gapped up quite heavily at the start of this week as well. So that's an interesting development in Tesla. I'd expect some resistance kind of come through if it were to move back up to this 1,200 level. That would be kind of where I'm looking for sellers to come back into the market and kind of push back on that. But certainly good for Tesla holders. This last week or so has been really positive for them. Lastly, I was going to take a quick look at Rolls-Royce. Just kind of picking random stocks that I think people are interested in, but you can see it's had a real key level support here. I'll draw it up so it's a bit more visually clear. But the kind of area of support, you can see it found support here 1, 2, 3, 4 times. It's about an 86.50 level. And it found support here again around earnings time. It was actually just after earnings, sorry. And it's had this really positive candle here. You can see it really broke all this resistance that was being found at this 97 level. But since then, it gapped back down and had this huge volume on the when it gapped back down, it had this really big volume that actually outdid the previous day's volume. So that's not looking so hot for Rolls-Royce at this time. But for me, it's this key level here, is this 86.50. A break of that could really open up. I mean, it's been in this really long-term channel. It's not you can kind of draw it like that. It's a little bit. There we go. So it's been this really long-term channel. So I think a break either side of this would be key. A break to the downside would really start opening up much lower levels. Let's bring this out to weekly quickly. Yeah, kind of like a weekly close, particularly below 86, I think could really start opening up this 65 level support here. But beyond that, the next real level support is the COVID lows of kind of this 40 area down here. So real key level here for Rolls-Royce holders. And yeah, that's pretty much it for me.
Nice one,
Jamie.
Okay.
I like the way you've got your time frames up in the top of that trading view. Actually, that makes it a lot quicker to switch over from different time frames. Save you going back and moving them about. I like that.
Yeah, it's quite nice now. I like it too.
Cool. Okay, gun to the head trade. So just a quick reminder on what we do here. Each day we pick a live trade. On the video, we must provide a stop and a target, and we have to do these trade ideas at market. So effectively with a gun to our head. So we're under pressure to come up with something pretty quickly. These trade ideas expire at 9 p.m. or when they hit the stop or when they hit the target, and we keep track of the performance. So I know Steve's itching to tell us about his trade yesterday, which went very, very well indeed. So it was Jamie's first go at it yesterday. So he got stopped out sadly on the New Zealand dollar US dollar trade, but that's the game. I had a tiny win on copper of 0.56R, but Steve stole the show yesterday with a 4R return on his oil trade. So
nice.
Is that good? I don't even know if that's good or not. It's just sort of like
that's what we call smashing it.
Yeah. That'll do, donkey. See if I can do it again today. I've got that sort of like arrogance or confidence that you need to sort of like really hammer these things home. So
Come
I'll
on, let's
obviously
see what you got.
dive into Bitcoin and just tell you how this Bitcoin is a great opportunity. Well, very, very good risk reward opportunity in my eyes. So let's take a look. Obviously, I mentioned the daily chart, the shooting star candle. That looks a bit scary. And also looking at the 4-hour chart, we keep seeing these rejection, especially over the last 8 hours, these 2 bars here. And we started this bar at 9 o'clock. So for me, that's rejecting the gains. Although it made a slightly higher high than the previous bar, it did close aggressively lower. So I think that's an opportunity. And if you go to the hourly chart, you know I love a head and shoulders formation, and they just keep popping out at me. So I can't but help but actually bring them up. So here we go. Like this one, left shoulder, right shoulder, same. Maybe we can get a bit of volume on there to add a little bit of that to it. Yeah, we saw the sort of like obviously the high volume spike, and then we've seen volume build as well into this right shoulder, and really looking in any, if you really wanted to trade this pattern properly, you'd wait for a break of the neckline, or at least a break of this, you know, if you want to be a bit more conservative, a break of 46,900. However, we've got a gun to a head, as Joe has said, and we're going to get short here, and I can put on quite an aggressive risk reward trade. If you really want to be conservative, you have it up here, but I'm going to be quite aggressive with this, and I'm going to think about the right shoulder and the 61.8% fib as well, and really target a decent move. Mission move target for something like this would be projecting the head to the neckline. Wherever it breaks, there you go, it'll be around about there. So oh, nearly 4-1. So that's sort of let's see if I can be clever and work it out. Oh, needs another naught there. 4-1 risk reward. Getting short here. Stop at the 61.8% fib, 47,851, and the target 45,801. That's my trade of the day. Gun to head.
Mate. Cool. Okay, I'm going to take a look at New Zealand dollar versus the US dollar. So on the theme of head and shoulders, I've got an inverse one here potentially forming, or has maybe formed, on the daily charts. So we've seen the left shoulder, the head, the right shoulder. We saw a breakout above the neckline on the 22nd of March, and we're seeing a little bit of a pullback now. So it has overextended that neckline. Sometimes these can work out quite nicely when that does occur still. You know, you've just got to ride with it and have a stop in a sensible place, I think. So I'm going to go for it here. I'm going to go on the intraday chart just for a little bit of a finesse on the entry. So we've got a pullback to a level I'm quite interested in, around 68.92. So we're currently trading at 68.91. So let's have that. And I'm going to target a move to 69.89 with a stop loss at 68.74. So I'm looking for 5.4 R on that one today, which is obviously pretty punchy. So let's see how that plays out.
Nice.
Jamie, over to you.
Yeah, so after yesterday's abject failure, I'm going to try a bit better today. So I've pulled out natural gas, which, sticking with the theme of head and shoulders, is kind of formed a little bit of a head and shoulders. It's not kind of the ideal pattern. I like the right shoulder being a little bit lower than the left shoulder, and this isn't the case here. I haven't quite figured out how to use that fancy head and shoulders tool, so I just use this blue line to show the neckline. But you can see here we've got left shoulder, the head, a bit of a right shoulder, and it's just kind of breaking through that. And my target is this kind of previous resistance level. The natural gas found some resistance that it broke through, so I'm looking for kind of a retest of that as my target. So looking at what the actual price is now, let's kind of zoom this in. I can get a little bit of a better price. So 544.5, that's a really well said sentence, is my entry. My take profit is 520, and my stop loss is 552.
Nice one.
And yeah, that's what I'm going to go with today.
Lovely.
Good
Well
luck,
done,
mate.
Jamie.
Looks all right.
Yeah, fingers crossed. Yeah, fingers crossed.
Okay, so day ahead, we've got the US JOLTS job opening numbers at 3
Oh,
o'clock
you
this
like that?
afternoon.
Look
Oh,
at that,
thanks for
Joe.
that, Steve. Look at that. And then at 3
See?
o'clock, also in the US, we've got the consumer confidence figure. And the other key dates to look out for over the week, as you can see, we've got the US ADP employment number tomorrow. We then have the US PCE price index. And then on Friday, we have the double whammy of the non-farm payroll number, as well as the US ISM manufacturing index. So a few bits to keep us interested this week on the macroeconomic front. Nice one, lads. Anything else for you to add to this, or are we good to wrap up, do you think?
Yeah, I think we're good to wrap up.
I'm all good here.
Lovely. Okay, well, let's do it. Have a great day, everybody, and we'll be back tomorrow.
Cheers.
Bye-bye.
Thanks, guys.